Good afternoon, everyone. My name is Jerry Schroeder. I'm the Senior District Representative for Congresswoman Susie Lee, and we welcome you to the IRS webinar that we're having today. We're going to wait about 30 seconds for people to hop on to the webinar. I know that people are just logging in right now, so if you have any questions, feel free to put your questions into the Q&A feature for the webinar, and at the end of the webinar, we'll go ahead and get some of your questions answered. So we'll just wait a few seconds, and then Congresswoman, you can go ahead and start whenever you want.
Thanks. All right. Well, good afternoon, everyone. It is my pleasure to welcome you again to my annual IRS income tax webinar. As you all know, it is now tax season with the filing deadline of April 18th fast approaching. And since we passed some pieces of amazing legislation in the past session that will offer taxpayers rebates and tax credits, we no longer have the stimulus payment from the pandemic. However, we do have these tax credits, and so I'm sure there are many questions out there. And we are being joined today by three experts who are going to help answer our questions. First, we have Brian Wozniak, who is the IRS Congressional District Liaison, Jeremy Oswald from the the Taxpayer Advocate Service, and Jodi Mobley from the Nevada Free Taxes Coalition. Most importantly, as you file your 2022 taxes, we hope that the information we're able to provide to you today will help you prevent making some errors that may cost you time in terms of getting a potential refund or rebate. As you know, last summer, I was proud to pass the Inflation Reduction Act, and we call it the IRA. And thanks to the IRA, Nevada families are eligible for hundreds of dollars a year in energy savings. First, there's up to 30% in tax credits for energy efficient home improvements, including heat pumps. That generally is capped at $1,200 per year. There are some instances where you could actually get a larger credit. We also have 30% in tax credits for rooftop solar, for batteries, geothermal heat pumps, and other property improvements, and up to $7,500 in tax credits for new electric vehicles, and up to $4,000 for certain used electric vehicles. And aside from the tax credits, the IRA also includes rebates for residential efficiency retrofits and electrification projects like heat pumps, cooktops, and other energy efficient appliances. And those are, all of those associated electrical upgrades are also eligible. And so I am happy to be here with these experts. And with that, I will turn it back to Jerry.
Thank you, Congresswoman. So first, I think we'll go ahead and start with Brian Wozniak. He has a presentation that he would like to give that's going to help some people with the taxpayers with filing their income tax returns.
Yeah, Brian, I think that your presentation is going to be incredibly important. And I'm sure that in your PowerPoint, you're going to walk people through specifics and what they can expect when they're filling out their tax forms and how they can actually get this money either in terms of rebates or tax credits. So thank you, Brian, for being here.
Okay. And good afternoon, everyone. And thank you, Congresswoman Lee, for the opportunity to share this important information. Let me start by sharing the screen, and bear with me just a moment while we work through the technology. Just a moment. I hope everyone can see the PowerPoint presentation titled "It's Tax Time, Get Ready for Filing Season." And I would like to open by providing an update on IRS processing and mission critical operations. Since the passage of the Inflation Reduction Act, the IRS has implemented several improvements that will help make this upcoming filing season easier on taxpayers and tax professionals. First, the Treasury Department just recently announced earlier this month that the IRS has hired 5,000 customer service representatives to help with the filing season, staffing the phone lines, processing returns, et cetera. And in addition, the IRS has hit its goal of hiring 700 people to work at taxpayer assistance centers. Those are the walk-in offices where people can go and receive in-person help. Also, we are opening mail within normal timeframes, and we have processed all paper and electronic individual returns that were received prior to January of this year. So all those individual returns have been processed. Now, there's one caveat, that is assuming that the tax returns had no errors or did not require additional review. So there are a handful out there still in processing, but the majority have been processed. So let's delve right into it. This next slide shows the topics we're going to discuss today. We will open by covering some general information about the tax return due date, payment options if you owe money, and the new increased standard deduction amounts. Then we will discuss changes to several credits that may impact individuals and families. And then the local taxpayer advocate, Jeremy, will tell you about some IRS resources, what services the taxpayer advocate can offer you, including where to get help, etc. So the first item, the due date to file, as the Congresswoman mentioned, the due date to file Form 1040 is April 18th this year instead of April 15th. And that is because the Emancipation Day holiday in the District of Columbia. So everybody gets 3 extra days to file this year. Simple as that. Next, what to do if you owe money. The first tip is to file your tax return by April 18th, even if you cannot afford to pay the full amount of tax owed. If you need additional time to file your tax return, you can submit a Form 4868, and that 4868 is an extension request, and that will give you until October 15th to file. However, an extension of time is not an extension of time to pay. They're 2 separate items, the filing and the paying. All taxes are still due to be paid by April 18th, and anything not paid by that date will continue to accrue interest and penalties. If you are going to have trouble paying your tax bill by the April 18th due date, do not panic. You still, of course, should file, even if you're unable to pay. Pay as much as you can by the April 18th due date to minimize the amount of penalties and interest that are going to accrue. And if you're going to submit a payment, you can see on the top of the slide, we have various options. There's an electronic funds withdrawal. There is a direct pay option. That is a free option that allows taxpayers to securely pay from their checking or savings account. We allow payments via credit card, debit card, digital wallet, check or money order, a variety of options, including cash at some of our walk-in offices. Then, if you cannot pay in full, there are other payment options, such as a short-term extension of time to pay. You see it on the second half of the slide there. And that short-term extension of time to pay essentially gives you up to 180 days to full pay the account. The next item there is the extended payment plan, which is a long-term payment plan with monthly payments. Second to the last item is the offer and compromise option, which is available to some taxpayers who may qualify to settle their bill, their tax bill, for less than the full amount due. And finally, you can request a temporary delay of collection until your financial condition improves. So the point of this slide is to file on time and deal with the amounts or any amounts owed separately. Next, the standard deduction amounts For taxpayers that do not itemize their deductions, they have increased. The amount of the standard deduction does depend on your filing status and other factors such as age, blindness, and whether you can be claimed as a dependent. So for most individuals, the standard deduction amounts are shown on the screen here. You can see for a single person, $12,950, married filing joint, $25,900, etc. Now we're going to transition into the credits section, starting with the clean vehicles credit. There is new and expanded credits for new clean vehicles. And the tax credit, first of all, it is available only for qualifying clean vehicles. We'll start on this by referring to the top of the slide. You see the website there, irs.gov/clean vehicles. That is the central resource on irs.gov for all the official guidance related to clean vehicles, both new and used. We have, the last time I checked, we had over 50 web pages posted there. There are frequently asked questions posted there, list of qualifying vehicles, all the official guidance with the criteria. Now, when you look at this, oh, and right below that website at the top right, you can see publication 5724-A, pub 5724-A. It's really not a publication. It's more of just a one-page electronic poster. And I realize it's hard. I just copied this and put it on the slide for you so you can see what that electronic poster looks like. But when you look at this, this is a great starting point because the publication explains all the basic criteria. First of all, that the maximum amount of the credit is $7,500 per vehicle purchased that year. Also, the amount of the credit cannot exceed the amount of the tax you owe. It can only be used to offset the amount of tax that you actually owe on the return. Third, the qualified vehicle must have a manufacturer suggested retail price. The MSRP must be below certain levels, and that depends on the type of vehicle. So for example, the MSRP must be below $80,000 for qualified vans, sport utility vehicles, etc., and then below $55,000 for other vehicles. The publication will also explain that there are income levels to qualify. So just for example, a married filing joint couple generally must have a modified adjusted gross income, that their income generally must be below $300,000 to qualify for the credit. Then there are additional requirements regarding where the vehicle is assembled and manufactured. There are requirements on the size of the battery, etc. It can be a fairly complex issue, and it is all based on the specific facts and circumstances of each taxpayer situation. But the credits are out there. You can look at the irs.gov webpage. One of my favorite parts of the webpage is there's a link that will take you that shows a complete list of all the vehicles that qualify for the credit. So that's a great starting point as well. If you're looking or considering a vehicle, you can go look and see which vehicles qualify. So again, if you're in this scenario, start with the irs.gov/clean vehicles webpage and the publication 5724-A. Now that is for new vehicles. This next slide shows that there is also a credit for previously owned vehicles. And if you're in that scenario where you're looking at potentially claiming the credit for a previously owned clean vehicle, again, you have the reference at the top of the page. The publication for previously owned qualified green vehicles is publication 5724, just a little bit different than the other one for new vehicles. But it will explain, first of all, that this credit for used vehicles, qualified used vehicles, is only available beginning in the 2023 tax year. It's not available for the 2022 tax year. So right now, most of the members in the audience are preparing their 2022 tax return, which is to be filed in 2023. What we're referencing here with the previously owned vehicles is a credit for vehicles purchased in the 2023 tax year. And when you look at the publication 5724, I realize it's very difficult to read on this slide, but first of all, the credit is available to all qualified buyers who are not claimed as a dependent on someone else's return. The maximum amount of this credit is the lesser of $4,000 or 30% of the sales price. Also, a separate item, I'm looking at it here, qualified buyers cannot claim the credit more than once every 3 years. The credit is only allowed if the sale price of the qualifying vehicle is less than $25,000. And then there are other criteria as well, similar to the credit for the new vehicles. There are income limits. So to be eligible for the credit, your modified adjusted gross income must be below certain levels. And those levels are based on whether you file single, married filing joint, head of household, et cetera. And there are other criteria there. So this is a great starting point. You can look at the publication, you can go to the website, you can see all the resources, including, again, a list of qualified used vehicles, et cetera. I'm going to transition here. The Congresswoman gave a nice introduction to the residential energy credits. There are two primary residential energy credits, and they've been renamed this year. The first item is, if you look at the top right of this slide, you can see the reference to the irs.gov webpage, www.irs.gov/F, as in form 5695. The 5695 form and its instructions are a wonderful starting point, as well as irs.gov. The 5695, the residential energy credits, are broken down into two categories. And again, they've been renamed because the residential energy efficiency property credit, which it was called last year, is now the residential clean energy credit. And that's a credit for property placed into service in 2022, and it goes through 2032. So it's available now and moving into the future if you're planning. And it is a 30% credit. This is a 30% tax credit for residential energy property. And this includes all those items. The Congresswoman mentioned many of these. We start with traditional rooftop solar panels, but it does include many other residential clean energy systems installed on your homes. So you have the residential solar panels, which are used to generate electricity, qualify. You have solar water heaters can qualify. There are also small wind energy systems that may qualify, geothermal heat pumps. It can include battery storage, fuel cells. Eligible expenditures generally do include the on-site installation cost. Many people often ask if these solar expenditures include products, newer products such as solar shingles, solar roofing shingles, and it does. And a few other items just on this part of the residential clean energy credit is if an individual does not have a sufficient tax liability, a large enough tax liability to use up the entire credit amount, because of course, sometimes these systems are expensive, you may not have enough to, your tax liability may be less than the amount you use or pay for one of these qualified systems. And if you're in that scenario, there is a carry forward provision that allows you to carry forward any remaining credit to future years. Now, the second part of the residential energy credits is the energy efficient home improvement credit. And this credit is for qualified energy efficiency improvements installed on or in your main home. And I would refer you back to the form because each type of qualified expense or energy efficient improvement you do has separate criteria. There are dollar limits on some versus others. There's a lifetime limit, et cetera. But what we're talking about here with these energy efficient home improvement credits, it could be something as simple as having installation installed in your house. It could be for qualified exterior windows or skylights or energy efficient doors. And then it moves into larger appliance. Certain electric heat pumps are going to qualify. The heat pumps to power your house. It also applies to electric heat pump water heaters. It can apply to energy efficient central air conditioners, natural gas, propane, trying to think what else, oil water heaters. There's a list of those that apply. It can apply to qualified natural gas, propane, and oil furnaces. So there's a whole list there. It depends on the specific facts and circumstances of your case, what type of appliance you're having installed, but you really are dealing with those two parts. The first one being under the residential energy credits, where you're really installing items that generate electricity, like the solar panels or wind energy, et cetera. And then the second part of the credit is for those energy efficiency projects that you may do, like an energy efficient heat pump or something like that. Going to transition just a little bit now and talk about credits. We'll start with the adoption credit, which also includes the employer provided adoption benefits. Many times when people adopt a child, the employer provides assistance with that. And both of those, the adoption credit and the exclusion for employer provided adoption benefits, have increased to $15,950 this year. Again, this amount of the credit will begin to phase out if you have a modified adjusted gross income in excess of $239,000, and it gradually phases out as you get to closer to $280,000 of adjusted gross income. I'd refer you, you can see the last item on the slide there. There's the form 8839 and the instructions. Those would be your resources to get more information. The premium tax credit. Now this applies, as the slide shows, for tax year 2022, that taxpayers may qualify for the temporarily expanded eligibility for the premium tax credit. The premium tax credit is a refundable credit that helps individuals and families cover the cost of premiums for their health insurance. But the health insurance has to be purchased through the health insurance marketplace. So if you're paying premiums, if you signed up for healthcare coverage through the health insurance marketplace and are paying premiums through there, you should look and see if you qualify for the credit. There is the form 8962 there. It's titled the premium tax credit, and of course the instructions that go with it. And there is also a publication 974 that contain more details to determine if you qualify. I'm going to change gears here just a little bit because these next three slides are going to address expanded credits, credits that were expanded in previous years under the American Rescue Plan Act of 2021. But the expanded portion of these credits has not been extended. The credits are still available. They were just expanded larger in previous years, and they've reverted back to pre-pandemic levels. And many taxpayers that previously claimed these credits may receive smaller refunds this year because the credit amounts, again, the credit amounts have changed back to the same criteria that were in place prior to the pandemic. So first, we'll start out with the credit for child independent care expenses. Again, the provisions that were implemented by the American Rescue Plan Act of 2021 were not extended to this year. For 2022, the 2022 tax year, the credit for child independent care expenses is non-refundable. The dollar limits on qualifying expenses, you can have up to $3,000 of qualifying expenses that will qualify for one person and up to $6,000 of qualified expenses for two persons. And then the maximum amount of the credit allowed is 35% of those qualified expenses up to the $3,000 and $6,000 thresholds. And at the third bullet on the slide there, you can see the instructions for the Form 2441. There's a publication 503. All the guidance is posted there. But I bring this up just because, again, those credits have reverted back to the prior amounts. And I'll take this opportunity to just mention that taxpayers can use a tool on irs.gov. It is called the Interactive Tax Assistant. It's an online tool, and you can use that Interactive Tax Assistant to determine eligibility for all these tax credits. And we're going to make that link for the Interactive Tax Assistance available to you in a resource document, and it will walk you through all the qualifying criteria for these. The next credit affected by the American Rescue Plan is the child tax credit and the additional child tax credit, which previously had the expanded provisions, but they also expired for the 2022 tax year. The basic criteria now for this year filing, for the 2022 filing, is the child tax credit is $2,000 for each qualifying child. The credit amount also has a phase out where your modified adjusted gross income, if it exceeds $200,000 for a single person or $400,000 in the case of a married filing joint couple, the credit begins to phase out at those income levels. The amount of the qualifying child tax credit that can be claimed as a refundable credit that could actually be returned to you is limited to $1,500 for each child. And the increased age allowance for a qualifying child has expired. So for 2022, a child must be under age 17 at the end of the year. They must be under age 17 as of December 31st, 2022 to be a qualifying child. Last year, the only difference is it was under the age of 18. But again, it's reverted back to the prior criteria. And as the Congresswoman mentioned in her introduction, there were no advanced child tax credit payments issued in 2022. The enhanced credit allowed for qualifying children under age 6 has also expired. And at the bottom of the slide there, again, I'd refer you to the instructions for Schedule 8812, or you can use the Interactive Tax Assistant on irs.gov. Finally, changes to the Earned Income Tax Credit. The prior year enhancements for taxpayers without qualifying children do not apply in 2022. So again, we're focusing EITC, Earned Income Tax Credit, Earned Income Credit, but for taxpayers without a qualifying child. So this means that in order to claim Earned Income Tax Credit this year without a qualifying child, you must be at least age 25 and under age 65. In the previous year, the criteria was 18 and older with no upper limit. So we've gone back to those levels. You can look at the instructions for 1040 and publication 596. You have the Interactive Tax Assistant. And with that, I will turn it over to Jerry or Jeremy.
Thank you, Brian. This is Jerry. Before we turn it over to Jeremy, I just wanted to remind people, if you want to ask a question, please put your question into the Q&A and we'll answer that at the end of the webinar. So Congresswoman, do you want to say anything?
Brian, yeah, I had a couple questions. You talked about for the residential clean energy credit that there was going to be allowed a carry forward. How many years is that? Is that just 1 year? How many, or is there a limitation on that?
There is. What you have to look at with the residential energy credits is which specific credit you're taking. If you're taking the credit for solar panels or those items that generate electricity, solar panels, solar energy for hot water, wind energy, geothermal, fuel cell, etc., those bigger picture items, that credit is available to be carried forward up through at least 2032. And if the legislation's extended beyond that, then it could go even further. So you have at least a 10+ window to carry it forward. The second part, where you're dealing with energy efficient improvements to your home, the insulation, the energy efficient windows, getting an electric heat pump, all those appliance related, qualified central air conditioners, etc., those generally apply to the current year and would not necessarily have the carry forward. They generally apply to the current year that you had those products installed in your home.
Great. And I know they're on the electric vehicles. I know that if you don't have a sufficient tax liability, in 2024, you can receive a portion of that credit applied to the through the dealer. Is that correct? But that only is for 2024.
That's correct. We're looking ahead now. So the first item is we're looking at the credit for new qualified green vehicles. So new versus previously owned, there's different criteria. And there is a provision in place where if taxpayers meet certain criteria, including the income limits, that's one of the more important ones to look at if you're in a higher income bracket. But beginning in 2024, there were provisions written into the Inflation Reduction Act where if you qualify, that $7,500 credit can actually be applied at the point of sale to reduce the out-of-pocket cost when you buy the vehicle. But again, we're looking at January 2024. We have guidance that we're working on right now to explain how that's going to work. And there's going to be information to buyers at that time if they want the credit up front when they buy the vehicle to reduce the cost of the vehicle and perhaps how much they have to finance, et cetera. We're going to be forthcoming with that guidance, but it can reduce it at the point of sale. And then there will be reporting requirements where both the buyer will have to provide some information to the dealer. We will be working with the dealers and the manufacturers as well to coordinate that and just on how that's going to be coordinated. But there is a provision where that $7,500 point of sale electric vehicle credit for qualified individuals could apply in January of 2024. I hope that.
Great. Thank you. Appreciate that. We're going to turn now to Jeremy Oswald, who is here with the Taxpayer Advocate Service. That is an incredible organization within the IRS that has provided assistance to taxpayers. And your services are so important because we know when people make mistakes on their forms, it delays the processing of their tax forms. And so we're looking forward to you walking through some of these common errors that would possibly occur. And just if you can walk through some of those so that we can educate the people listening to prevent them from making those types of errors.
Yes, of course.
Jeremy, before you answer, Brian, if you wouldn't mind, you can stop sharing your PowerPoint, and then that way we can see Jeremy. Thank you.
So of course, as Congresswoman Lee mentioned, my name is Jeremy Oswald. I'm the local taxpayer advocate for Nevada with the Taxpayer Advocate Service. And we're an independent organization that's within the IRS. And really, we just exist to help protect your rights as taxpayers and to help you with tax problems that you couldn't resolve on your own or with the IRS. We do have a website, taxpayeradvocate.irs.gov. Has a lot of information. If you've gotten a notice, you're not understanding it, you could look that up there. We can link to a lot of helpful articles on irs.gov, but it also indicates how you could reach us to get our services. But if you've been working with the IRS and you've tried to resolve your issue, but it's not getting resolved, and you're in a hardship situation, you can reach out directly to us, or you can reach out to us through Congresswoman Lee's office. And what we'll do is we'll assign an advocate in my office to work with you to resolve your concerns with the IRS from start to finish. Because, with the start of the filing season, we really start to see lots of cases about delays in refunds. And it's, just the reality that some things will take longer at the IRS than maybe you might be used to in the past. The IRS has established several checks on items on tax returns to help combat things like identity theft. So on the one hand, it's really good. There's a lot less identity theft, but on the other hand, some refunds may be delayed a little longer because of those checks. And so, some things you can do to help avoid those delays now is, first off, if you're able to, we strongly encourage you to electronically file your tax return. The IRS is very efficient at processing electronically filed tax returns. Returns are getting processed, refunds are getting issued quickly for those electronic filing. On the other side of things, if you're paper filing, that's okay. And the IRS is still doing a good job at getting to those, but they just take longer. Everything has to go through the mail process, getting opened, getting typed into the computer before the system can start doing its checks. When you file electronically, there's some checks that are done right immediately through your tax software that you use that make sure that you're not making some more common errors on the tax return before it even gets transmitted over to the IRS. So we strongly encourage that. When you are filing, electronic or paper, make sure that you're using your W-2 to file that tax return. Some people use their last paycheck stub or things like that. If you're a wage earner, the W-2 is what you need to use. The figures on it will be different than your last paycheck stub from the year in many cases. And the IRS is looking for the figures on the W-2. And when they don't match up, that causes refund delays. Some other common errors, are just things that you need to double check, such as making sure your social security number is exactly correct, birth dates, that information also for your qualifying children that are on your tax return. Any of those common things can cause very lengthy delays at the IRS. And so just double check before transmitting those things to the IRS that those are okay before you move forward. And with that, I can turn it back over to you.
Thank you so much. Appreciate your work, Jeremy. And Brian mentioned one of the provisions in the Inflation Reduction Act was the hiring of additional IRS customer service representatives, and definitely looking forward to it. It's been a political hot button, but most importantly for us, especially for us working in congressional offices, dealing with people who have questions, it's going to allow them to get their questions answered and get their tax returns processed faster. And so I think that's a great addition to the IRS. Now I'm going to turn it over to Jodi Mobley from the Nevada Free Taxes Coalition and the Volunteer Income Tax Assistance Program. Anyone who's been on listening to this presentation, and Brian, thank you so much for your presentation. It still seems a little complicated. And so the Nevada Free Taxes Coalition and their assistance program is just one more resource. And so I just wanted to turn it over to Jodi so you could explain how you can help people who still might be confused with all the forms and all of the different tax refunds and credits, et cetera.
Thank you, Congresswoman Lee, for this opportunity to talk about Nevada Free Taxes Coalition and VITA, the Volunteer Income Tax Assistance Program. We're in our 9th year of working with the IRS to sponsor sites where volunteers can help people file their taxes for free. This not only benefits NFTC by building partnerships throughout the community and increasing community involvement, but helps to bring dollars back into our community. Our mission at NFTC is to aid low to moderate income households, ensuring that they receive all the tax credits that they're entitled to. The coalition's efforts support the Volunteer Income Tax Program, VITA, to provide free income tax preparation services to low to moderate income taxpayers. NFC currently operates 11 VITA sites throughout Clark and Nye counties. So if you earned $60,000 or less last year, we can help you prepare your tax return and e-file it for you. Our team of IRS certified VITA volunteers who prepare returns must take and pass IRS tax law training, and IRS requires a quality review check for every tax return that's prepared at a VITA site before that tax return is filed. We help single filers, we help students, we help seniors, limited English speaking households, persons with disabilities, and veterans. VITA has operated over 50 years. VITA sites are so important because 1 in 5 people don't take advantage of the available tax credits, means that these people are leaving money on the table. And our VITA volunteers can help these folks claim tax credits that can put money back in their pockets. The 2021 tax returns processed in Nevada with earned income tax credits claims totaled around $327,000. Now we know there have been changes. The average EITC, earned income tax credit amount received per household last tax season, was almost $2,000. Our community partners play significant roles in providing the support that we need to operate our VITA sites. And this support takes the form of setting up the software, providing registration assistance to file the tax returns, securing the equipment that we need, including the computers, the printers, and even Wi-Fi connections, and of course, recruiting, training, and scheduling volunteers. Partnerships are also vital to support the VITA volunteer experience. That volunteer experience can play out in several ways, of course. There's the tax preparers, yet VITA volunteers can also serve in other capacities, such as greeters and screeners, quality reviewers, site coordinators, translators, interpreters, marketing, training, and IT supports are routinely sought after. The VITA volunteers are the lifeblood of Nevada Free Tax Coalition. We have many repeat customers year to year. Those who serve us are so generous, and those we serve are generous in their gratitude. Those with the least are the most generous. People helping people, making a difference and strengthening families. That's what VITA does. And our information will be given afterwards, but if you'd like it now, our website is nvfreetaxes.org if you'd like more information. Please visit our website. Again, thank you, Congresswoman Lee.
Thank you. Well, thank you, Jodi, and all of your volunteers who, like you said, help those who have the least, which is so important. Thank you for that vital service. I think now we're going to turn it over to Jerry, who has some questions from the audience, and we'll just run through these questions to answer them. Jerry?
Sure. Thank you, Congresswoman. So the first question is from a constituent. He says, I do my own taxes and therefore need the correct forms and instruction manuals to complete my taxes on time. No longer can I go to the IRS office in Las Vegas to get forms, instructions, and manuals. Why did that change, and how long will it take for the forms to arrive to my home?
It's up to you, Jeremy, Jodi, or myself.
Yeah, we'll let you answer it, Brian.
I'll start off. I know Jeremy can chime in afterwards. So first of all, there is a transition. Printing products cost money. Years ago, we used to print very large publications, publication 17, it's expensive. We have moved to this era of electronization, I would say that way. You can order forms online, or you can call. There's a general phone number. It's simply 1-800-TAX-FORM. If you spelled it out, 829-FO, I think it's 3676. But 1-800-TAX-FORM. They usually arrive in 7 to 10 days. It depends if a particular form or publication may be on back order, but they do go out that way. And that's part really of Jeremy and both Jodi mentioned this. It's the move toward the electronic filing. If you want to navigate the IRS the easiest way without having delays, things of that nature, file electronically, do the direct deposit, use the online tools, use all those free resources available, use the VITA sites. Jodi brought up a good point, which I didn't want to forget. A tremendous wealth of resources for limited English or non-English speaking people. We have web page. First of all, we offer forms and publications in up to 6 languages where the most common forms are available. Not just Spanish, but we have Russian, Vietnamese, traditional Chinese, Mandarin Chinese, Korean, Creole, etc. And then we have up IRS.gov in up to 25 languages. But the point is, back to the heart of the question, is it's part of the modernization. There is cost. When you talk about ordering a paper 1040, I would strongly encourage not to file on paper, the manual processing involved with that. Use it if you want a template to help prepare it, but at the end of the day, file it, get the acknowledgement, the return's been received, do direct deposit. If you have a refund, you're generally going to get it within a few days, 21 days max, versus 4 to 6 to 8 weeks to process a paper return and the possible delays. Jeremy or Jodi, you're welcome to.
I was just going to add, that right at irs.gov, click file my taxes for free. And if you have an AGI that's 73,000 or less, you can get guided tax preparation for free and file electronically that way. There's also free fillable forms on their site. A portion of the money from the Inflation Reduction Act that Congresswoman Lee mentioned is also going into looking to more efficient ways for electronically filing for you in future years. So there's definitely advancements coming. But currently, the IRS website links right there on the homepage to free file. And that's 73,000 with your adjusted gross income or less. If you're higher than that, it has those free fillable forms that are available for you right there online.
Thank you, Jeremy. I think that we can now turn to another question from the audience, which is TurboTax up to date to meet the latest changes, and is it effectively used?
Politically sensitive, I think I'll defer to you, Jeremy, if you prefer. We don't number one endorse any particular software program. We are an independent organization that administers the tax law. All those other programs stand alone. They do, Jeremy, they do go through an extensive product testing to ensure that their products are complete and will correctly prepare a tax return. We have all types of assurance testing. I don't know if the taxpayer, the constituent, has particular concerns. Jeremy or Jodi, you can.
Yeah, you answered it basically the exact way that I would have. We can't, say that one site is better or it's a private company's site. So we can't speak to whether it's up to date or not. But I can tell you that the IRS does assign someone to every major software company that works very closely with them to make sure that their system is transferring the information to the IRS system effectively without error. And so they do work closely with all major tax software companies.
If their income is below 60,000, we hope that they will come and have their taxes prepared by a certified VITA volunteer.
That's a great
And on that
resource.
note, I was just going to say, Jerry mentioned going to irs.gov. That's a different item. The Free File Alliance is a coalition where you can file online at irs.gov. But if you meet the criteria to visit Jodi and the folks at the Nevada Free Taxes Coalition, if your income's under that threshold, certainly have a qualified volunteer help you with that. And you can address those questions to them in a face-to-face in-person setting. And they have locations all over the state. Sometimes, Jodi, do you still do returns remotely at all as well for some individuals?
No, but we refer them. We do not do the tax returns currently remotely.
Okay.
I don't know if anyone can answer this, but Scott asked, what are some ways to reduce taxes in retirement while withdrawing funds from tax deferred accounts like 401ks and IRAs?
That's borderline getting into the tax planning aspect,
Yeah,
which
that's what
we
I
at the
thought.
IRS don't get involved in tax planning. There are a variety of methods you can look at. It can be as simple as looking at the tax brackets. We work on a progressive tax system where the first part of money you make is taxed at nothing at all, really. Then the next portion's at 10%, then the next chunk at 15%. So you may want to look, if you just, for example, have a large distribution you want to take out, you may think, well, maybe I'll just take a portion and have it taxed at those lower rates and defer withdrawing it. But all those tax planning, coordinating, that's really something, if you're in that scenario, you might want to speak to a tax professional. And we have a link on choosing a tax professional, what to look for in them, et cetera, and find someone that meets your needs for that particular situation.
Thank you. I thought we were getting a little away from the IRS mission here, but thanks for that answer. Jerry, I think that's all the questions we had. Is that right?
I think the last question was already answered. Does the IRS offer a free electronic filing method? If so, how do I access the site? So that's through irs.gov. Is that right?
It's isn't it tax form? Is it IRS?
Jeremy?
Right on irs.gov, they've got, a big, how can I help you in the middle? And one of the options there says, file your taxes for free. And it's just right there. You click on that.
Great. All
That's
right.
all
Well,
the
thank
questions we
you.
have.
Well,
That's all.
this is always such an informative seminar that we have every year. And I want to thank Jeremy, Jodi, and Brian for taking time to be here to help our constituents. And I just want to say, if anyone has further questions, obviously, if you qualify, reach out to Jodi Mobley in the Nevada Free Tax Coalition for assistance. If you don't know where to go, you can always call my office, 702-963-9336, or you can write us an email, susielee.house.gov. We'd be happy to assist you and point you in the right direction. And then if you do have a question or a dispute from previous tax filing years and have any issues with the IRS, that is the type of casework that we do in our office. And Jerry Schroeder, for instance, just helped a local small business retrieve over $1 million in the employee retention tax credit. So those are services we can help you navigate if you have any types of questions along those lines as well. And so thank you again. Happy tax filing season. I hope that all of you out there are able to take advantage of some of these energy efficiency tax credits and rebates and clean vehicle tax rebates to reduce your tax burden, and more importantly, move us into more of a clean energy future. And so again, thank you all for being here. Thank my experts, and we'll see you next year.